In this video, traders, let's talk about intraday risk management. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. All right, so you day traders out there, you want to manage that risk intraday. And why that's so important is because we can get so caught up in the oscillations and the regime and the highs and lows and swings and volatility of an intraday market. And it's easy for us to be so focused and blinkered on what's happening here, we forget to kind of take a step back and think this is one day out of hundreds, thousands in your career. And we tend to put so much weight on it. We're so biased as to the outcome of today, we can end up getting caught out and we can end up getting emotional about things and frustrated and revenge trade and all those kind of things that we just really don't want to do and really upset the apple cart. And so these are the key things that I think that you must have to manage your intraday risk. So intraday risk management 101, if you like. First thing is a max loss limit. Now, there's some size. I was interviewing a trader on Hugard actually. I think I've told about his book. I think it's a great book. Recommend it. Best Loser Wins. He said something interesting. He said, "Hey, I don't stop. When I have a certain number of losers for the day." And that's someone who's obviously very disciplined enough to say, if I don't see a trade, I'm not going to take it. The danger, I think, with that for many traders, and everyone trades differently, and it's absolutely not for me to say how another man or woman should trade. But I think the danger you have is that if you don't have a max loss limit, and this is from my perspective as well, I know that if I'm losing, I'm probably going to continue losing. It's rare for me to recover the day in the afternoon. Now, perhaps for someone like Tom, it's something that happens. He has a losing morning and recovers it well in the afternoon. And if that's you, then maybe you can adjust it. But I still think there's a max loss limit on the day that most traders should be putting in that says, hey, you know what? If I get to this point, I should be done for the day. I'm out of tune. I might be trading for emotion. I might not be realizing that my efficacy is low, my concentration is low, my focus is low, my performance isn't good. I'm just going to dig a hole. And that's how it is for me. If I know if I hit a certain level, yes, maybe in the afternoon I'll make some great trades and come out of it. But I don't really care. I'm not feeling it. I've done some damage. I don't want to do more damage. I don't know the reason at that moment in time. It could be that my trades are just rubbish. It could be that I'm just not in tune with the market at all. It could be that I'm fatigued and I don't realize it. It could be that I'm thinking about something outside the market that's having an impact. It could be I didn't get sleep and it could be anything. And so I think the best thing for me to do is just go shoom, pull the plug and come back tomorrow. Now, I might have larger loss limits on certain days when I think there's going to be volatility that allows me a little bit more flexibility and I'm going to trade a little bit more aggressively. So a specific pattern on a daily chart, I might say, hey, this is going to be a good day intraday, some opportunities here, let's double the loss limit. And because to allow for maybe getting a little bit wrong first thing in the morning and then recovering because I know there's opportunity, that's a structured way to do it. I've still got a loss limit for the day. So max loss limit I think is important, very, very important. Number two, a max per trade risk. Like the same as the max loss limit of the day. I think you should know how much you're going to lose maximum in the trade and you adjust your position size to suit and accommodate the stop where the stop's going to be. Why is that important? It's important mentally because then you know you're not going to get hurt massively by a specific trade. Like, hey, that's the risk on the trade. Whatever happens, it's that. And so you can kind of then adjust your position size to suit. Because I know me, I have a tendency to trade way too much size for the position. So it's important for me to go, hey, look, if you trade that size with that stop, that's going to negate your max risk rule. Dial down the size a bit. If you want to add later on, that's fine because the max risk on the trade doesn't change then, but you need to do that before you start scaling up into these clip sizes. And so for me, max per trade risk, absolutely essential. And you don't have any fear in the market. You're like, I don't fear the market. Worst case scenario, get stopped out. You're like, okay, am I okay with that stop? Yeah, fine. Next trade. So max trade risk, I think, is very important for intraday risk management. Max percent give back limit. This is okay if you're up X amount, how much will you give back? Now some people might risk it all and go, hey, if I'm up 15 grand, I'm prepared to go to my max loss limit on day, which is 5, whatever the number may be. I think for many people that can cause you to go on tilt and cause you to get frustrated. So you might say, hey, once I hit 10, I'm only going to give back 5. And then every incremental 5, I knock it up 5. Or I'm going to give back 50% once I hit 10 or whatever. Or maybe you don't have that watermark. You just say, hey, I'm going to give back only 50%. Now I think you do have to have a watermark where that locks into place. Because if you're up like $50, $100, you're not going to stop if it just rocks back $50 on you. Especially if you're aiming for 3, 4, 5, 10 grand. So have that level, I think, and again, it's much my opinion on stuff, when you get to that point, you go, right, I'm not going to give back more than this. And again, that's not the best way to trade stuff, but I think from a mental perspective, if you're one of these traders who gets frustrated at giving back profits and gets annoyed, then locking that in is probably far better than the opportunity to recover and go to fresh highs. I'm being sensible about this as well, saying, okay, listen, if I'm out of tune, I'm probably going to give back X. If I'm just a wrong couple of trades, I'm going to give back X or Y. And you make sure that the maximum drawdown percentage limit is somewhere in between those two. So max percentage give back limit, I think, is essential. For hours, how will you trade? Hours you will trade, should I say. And this is really, what's not to do with risk management. This is not intraday risk management. It is in a way, because we forget that we are using so much energy and the cognitive load and focus is so high when we're intraday trading that we need to have this, because again, it's kind of from my perspective, I know that I can easily creep into fatigue and making mistakes and I don't realize it. And so I'm very strict and say, okay, listen, I'm not going to be sat in front of this screen all day long. And this has changed over the years, by the way. I know years ago I'd sit in front of the screen all day long and I'd probably get away with it. But I'm much more, I put 100% of my effort in, very, very focused on a very specific point in time, then come out, take a break, go to the gym, come back again. And maybe I've missed something, that's fine, come back again, maybe look at it again. So I'm structured about when I implement my focus or exert focus on the market. I think the key and the reason why that comes under risk management is that we can creep into this fatigue and lack of focus without realizing it, and that's dangerous. So, but it is a risk management perspective. It's almost like having, driver hours on HGVs. Okay, we have lorries where in European Union, I guess it's the same in Europe and UK, should I say? I guess it's the same in the US as well. There's a specific amount of hours that a driver can drive, and then they must take a break, they must take a longer break, and there's all structure. I don't know the specific rules from it. Some of you HGV guys can probably inform me in the comment section below, but I know there's forced breaks. And the point is so that you don't carry on driving when you're fatigued, and it's a risk management procedure or rule, if you like, because it's well known that fatigued drivers, tired drivers, are more likely to have an accident. And so you're mitigating the risk. Just same with trading. I know that a fatigued trader in me is more likely to make a mistake that's going to cost me money. So why don't I implement these rules that say, hey, hours I will trade in a day is X, because I know that after that, generally my performance degrades. Number 5, frequency of trades and total trades. Optional. But if you're an overtrader, essential. What do I mean? So how many trades you're going to take in a day? I don't use this because I know that this is going to lock me out way before that. And if I take a few trades and the small trades or win loss, maybe just kind of oscillating around that neutral market, it doesn't matter so much, because all that really matters is that I don't do massive damage if I'm wrong on the day. So, but if you're an overtrader, this can stop you overtrading crazily. If you know that overtrading is detrimental to your account, you might say, hey, I'm only going to take 5 trades today or 3 trades today. I'm only going to trade kind of 3 times in one sequence, and that's frequency. So there's a trade idea, it's a breakout trade idea, or it's whatever it is. I'm only going to trade that twice and then look for the next sequence. And so adding some shackles a little bit into your trading and how you trade, I think is pretty good, because, and again, it depends on what you're trying to achieve. I think with more experience, it doesn't matter so much, but you might want to say, hey, listen, I know, generally speaking, back on my blotter, that if I'm trading 20, 30, 40 times a day, then I just have a bad day. I dig a hole, I'm not in performance, and I end up taking substandard trades because I think I can take any trade I want. The advantage of having a set number of bullets, if you like, and saying, hey, I'm only going to trade 5 trades today, is you're much more mindful and considerate about when you take the trade. So there's a distinct difference, right? If you know, hey, I've had 2 trades early on, they weren't great, now there's opportunity, let me wait for this a little bit more, you're less likely to go in and think, oh, I'll just take this trade and see what happens, and come out quickly and end up just squandering the idea. So one for overtraders, I think, is essential, is to cap the frequency of trades and total trade you take in a day. And number 6, circuit breaker. So circuit breaker might not be something that you're looking actively intraday, but it's basically how much is the max drawdown from highs. I talked about this, I think, in another video in slightly different context, but important. And you should probably know this before you go into trading day, rather than having to look intraday. So let's say, for example, you are up, it's just a round number, you're up 10 grand in the month. and you say, hey, I don't want to give back more than $3,000. I want to make sure I'm up $7,000 on this month, for example. You will have a circuit breaker in, so you don't end up giving that all back. Because again, mental thing, there might be an argument to say, well, you know, you can't really chop it off in a month. But I think if you're a trader who likes to kind of see the numbers each month, you might go, hey, you know what? I've given back $7,000. I've given back $3,000 in the last kind of week. I've got 4 days to go. I'm done. I'm just going to take a break now and come back on the first of the month with a zero account. Look at it as or hopefully not a zero account, but look at it as if I'm from starting from zero, and then use that mentally to kind of propel me forward. So obviously you shouldn't be checking this each intraday every minute. You should know where you are, whether it's important or not. But really, a circuit breaker says, okay, let's use that example. You might say, well, actually, my circuit breaker was way more than my max loss limit. I don't need to worry about it. Let's use that example again. $3,000 drawdown. Your max loss limit is $1,000. It's nowhere near it. But for example, if you're now sitting at, let's say, $7,800, you normally have a max loss limit of $1,000. You might have to adjust your max loss limit to $800 to accommodate the circuit breaker, if that makes sense. Because you made 10, you don't want to give back more than 3 in that example. So I think that's key as well. Again, it's all about, you know, there is arguments to say this isn't effective. I get it. But there's also arguments to say a lot of the things we do as traders is for the mind, not necessarily for the P&L. Because if the mind gets all messed up, and it doesn't matter how good we are at other stuff, we can do damage to the account, or we can just trade poorly. So understanding that sometimes we do something to soothe the mind and to make ourselves think a little bit clearer, and that will ultimately support the P&L over the long term. All right, guys, intraday risk management techniques, I guess I should have added on that. Take care, keep your risk managed, of course. See you next one. Bye-bye.